and welcome to this week's Trading the Trend on Wednesday, the 20th of March, 2024. At the end of February, we went long the US volatility index, the VIX, and did so around 1459. And since then have had ample opportunities to get out of our trade with a pretty large profit. In case you haven't done so yet, because I did mention an upside target at 1650, which we didn't quite reach, maybe what you can do is just raise your stop or take profit stop to your break-even level, so that in theory you have got a free trade on. If you haven't got this position on yet, maybe it might make sense to go long now the VIX because of the FOMC meeting later on today. Perhaps we'll see some volatility on the back of that, and that would lead to a potential rise again. But if you were to do so, I would probably use a stop loss below the December low around 1375. But anyway, that trade is either cashed in, or you can cash it in with a profit now, or just raise your take profit level to break even. Then we also went short Chicago wheat at 552, and that was on the break of this downtrend, that major support giving way going back to September of last year. Here our stop loss is 595. That one I would still let run. And then last week we went long Brent crude oil and did so around 82.46. Here we can now move our take profit stop to above our entry level and thereby have a potentially free trade on, or we can just cash it in now with a nice profit around 85.83. And this brings me to this week's Trading the Trend, and what I would like to look at is the British pound against the US dollar cable, because as you can see here, since October of last year we've been rising. We had a strong ascent between October and December, then we had a sideways trading range for much of the year until the beginning of March, and then we rallied to 128.93. And earlier this morning we had UK inflation out coming in lower than expected, and on the back of that I wouldn't be surprised if the British pound were to appreciate going forward, because the lower inflation reading hasn't really led to a further sell-off in the currency pair at the moment. We'll have to see what the FOMC says later on today with regards to its dot plot. So that will have probably a pretty important impact on the US dollar. And what I would like to do, because I believe this trend will continue to go to the upside, I'd like to buy the British pound against the US dollar for these technical reasons, basically with a wide stop loss. So this week's Trading the Trend is to go long cable of the British pound against the US dollar at around 127 with a stop loss just below 125 and an upside target of around 130.